Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 12th of January. So we're into the first part of the new year, and a lot of the indices and currencies that we've been watching have generally moved in a pretty negative direction for the most part since Christmas. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD. And we can see basically since Christmas, we've been basically falling systematically all the way down to the support zone, which was resistance previously at around that 66.80 mark on the chart here. You can see here we've got pretty strong resistance right through there, and you can go back and you can find resistance all the way through this zone. So if you go back far enough, it's a very, very important zone. So no real surprise that it has landed itself here. But what we have seen over the last week is, quite spiky behavior from the candle. So we've seen some, very interesting battles between the buyers and the sellers. And it seems to be trapped between the 20 moving average and that roll reversal zone at that sort of 66.80. So realistically, the move that happens from here, be it down or up, is going to dictate the momentum more than likely for next week. So if we get a daily close above the 20 moving average in the next 24 hours or so by the end of the week, then we're looking at a reasonably strong move up. And not to say that it's going to reach the absolute tops, because we don't really know that until the momentum kicks in and we start to see a series of higher highs and higher lows. But if we don't get that, then more than likely it's going to probably fall down to around this level here, which is around that 65.50. So really use the wicks as our guide here. If we get a daily close below 66.50 and the 50 moving average gets broken, then we can start to gravitate down to the 65.50 area if we continue to see lower highs and lower lows on a smaller time frame. But if we get a break above the 20 moving average, that really signifies that this level is being protected by the buyers, and then we can start looking at moves up. And really, that's probably the preferred move, because that would really make a lot more sense for what we're seeing here with the roll reversal zone. But either of them would be valid tradable opportunities if we get the sequence. So all we need, a close on the daily in either direction above the support or resistance, or below the resistance, and then we're off and running. All we need to do is look for the pullbacks on the 1 hour, a series of higher highs and higher lows for a long above 20, and a series of lower highs and lower lows below that 66.50 mark if the daily closes below there. So pretty straightforward trading on the Aussie. All right, we'll move over to the US dollar CAD, and this has been the opposite. Obviously, it's been pretty strong since Christmas, and you can see we've basically worked our way up. Still a little bit wicky over this week. Really, as the volume starts to return to the market, you can see that we're starting to get a little bit more wicky, but that's really probably telling us more about the time of the year than it is anything else. We can see that it's closing above the 20 moving average. Now, it has moved up a reasonable amount. The next very serious resistance for it is around that 135 mark. You can see here through this point at that green line. I would probably prefer a little bit of a pullback on a smaller time frame, really. Like, I'd be going down to maybe a 1 hour time frame, look for a pullback to a 20 moving average. So we can we'll just reset that. And if we get that, a bit of a pullback to a 20 moving average and a series of higher highs and higher lows, that's what we'd be looking for on that. It has been basically grinding its way up, as you can see, sideways movements and very slight increases in movement, but it's getting the job done nonetheless. So the strength is still there, but I'd be really looking for basically a little bit of a pullback to the 20 moving average would be ideal right now on the daily, and then look for continued strength. If, of course, it fails here, there is a bit of resistance here. There's no question about that. If it rolls over and starts to make a series of lower highs and lower lows, then we'll reassess and we'd be looking for targets around that 132.50 area. So a bit of work to do for that to happen, but it certainly can. We'll look for the series of lower highs and lower lows in that instance. All right, on the US dollar yen. A similar story, found support at the 141 or just above the 141. It did test the 140 or the lower 140, and then it really pushed up higher, came back and tested the 20 moving average. This is really what we want to see on the CAD that I just explained. A pull back down to the 20 moving average, and then off it went again, and just touching the 146 resistance zone. So it's been very, very good trading the yen for a number of days now, actually, and hopefully you're able to catch some of that, because it really signified all the principles that we talked about in the previous sessions and late last year of what it did. Double bottom, move up, test of the 20 moving average up to the resistance. Now, yeah, at this point here, we needed to break the resistance to look for any more movement up. Obviously, it's had a reasonable move, but it's got a bit of a doji candle today. What we're looking for here is a daily close above the 146.50, and if we get that, we could look at moving up and trying to grind up to around that 148.50. Still plenty of pips there to be had because obviously the fall was very big. The moving averages are getting closer together, but there's still a bit of work to do before they get crossing up. So obviously they're still significantly apart, but this move has certainly helped. This impulse move has helped to bring them a little bit closer together. But ideally, we want a daily close above 146.50, and then we look for pullbacks on the smaller time frame to the 20 moving average and trade in that direction. If indeed it fails here at the 146.50, then we'd look for a bit of a rollover effect, and we'll be targeting in the first instance around that 143.80, which is not a bad zone. And you've also got the 144.50 here area. That area there, the resistance will provide some form of support if it does start to sell off. So really just follow the patterns at the moment. We're not looking for long-term positions. We're just looking for scalping opportunities in the direction of the prevailing trend and staying within the zones on a lot of these. That's it's quite important at this time of year just to really let the market find its feet and then trade in its direction either way it goes. So just keep that in mind that you want to be probably keeping them relatively short at the moment. Over to the dollar index, and this has been very, very flat. Flat, and I guess the movement has been restricted. If you look at the highs and the low closes over the last week and a half, you can see that there's a very, very small range between them. But the wicks have been a little bit more pronounced, so the movement has been big. But in the end, the closes and the opens have been relatively tight together. So pretty interesting price movement here. It needs to really, it's very basic really. If it gets above the 20 moving average and starts to trade above there, it's a different story. But while it is staying below the 20 moving average, what we're looking for is potential reversal points at this level here. So if we start to weaken off around this level, the real key number is the 102. If we break down below the 102, then we're going to start looking at trades down to the 100 again. But the daily needs to close below this. So it's certainly got a little bit of work to do there. It hasn't done that in quite some time. So we need a daily close below the 102 before we get serious. But likewise, we also needed a close above the 102.80 to signify that we are breaking past the 20 moving average to look for moves up. Now, of course, the euro is the one we're really interested in here because it's the easiest one to trade. And a very similar scenario is there. We've got resistance right above at the 110, obviously a round number, psychological level. It touched it. We've got the doji candle there. Has been in an uptrend. There's no question about that. We've got a series of higher highs and higher lows all the way through on the daily. So no real surprises there. But what we're looking for is a break of the 110 before we start looking for highs. So obviously, you know, in order for it to reach that sort of 111-ish area, the dollar index is going to have to sell off. So we're going to keep an eye on both of them. But it is trading above the 20 moving average at the moment, a little bit more pronounced than the dollar index was. So we're looking for a daily close above the 110. And if we get that, we've already got the momentum swing, so we're not really having to wait for it to come and retest it because it's already done that. We'd be looking for moves up to around that sort of 111 area if we get a daily break, and you want to be entering that on pullbacks to a 20 moving average. Let it reverse on the 20, and that is the best opportunity generally. So what we also want to look for is a potential weakness here. So if the dollar index does start to increase, which it can certainly do because it is going sideways at the moment, if it does, that's going to signify weakness, and obviously it's 110 is very significant resistance for a reason. So if we do see weakness at this level, we're looking for, at the very, very least, so a daily close below 109. If we get a daily close below 109, we start to target all of those areas that got it up there in the first place. The 108.50 would be the first support target that I'd be aiming for a scalp. And if we start to see some really deep pullbacks and a big move on the dollar index, then potentially all the way down to that 106.80. But yeah, it's got a fair bit of work to do before it does that. In the first instance, we'd be looking for that 108.50, but we need a daily close somewhere in the vicinity of around here before we start to target that on the short. So a close above the 110, and then we'd be looking for a series of higher highs on the smaller time frame. Pretty straightforward on the euro. And onto the S&P 500. So this has been quite strong actually leading up to Christmas. We've had a bit of a pullback early this year, but it found support on the 20 moving average. Look, it's finding itself at the all-time highs, of course. You can see here we've got a very, very heavy case. It did hit it hit basically the 4,800 in today's session. Big doji candle now. look, it's one of those ones where there's resistance here. There's no question about that. It's one of the ones where I wouldn't be taking the first break of this level because it's obviously an all-time high. So I would let it break through and then come back and test it from above. That's the best way to play that one. If we, that way let the market forces actually dictate where it's going rather than us trying to predict it. If we get that and it comes back and tests it and we start to see a rounding bottom or a series of higher highs and higher lows on the smaller time frame, then we'd be looking at taking short longs, like when I say short, like short-term longs to continue in the trend's direction. But if it fails here, the first sign that we're going to be going for basically is the 20 moving average, which is around currently at around 47.20. So if we start to see a series of lower highs and lower lows on the smaller time frame in the next trading session, I'd be looking at targeting the 20 moving average. But failing that, if we start to see a systematic sell-off and we start to pick up some momentum on the sell, the next real logical level is 4,600. So yeah, certainly enough points away to get some good trading, but there's a bit of watching and seeing on the S&P, no question about that, given that the level is at the high here at very close to 4,800. So I hope you've all had a great holiday period. Looking forward to a big year of trading this year. So thank you for joining us, and we look forward to seeing you all again next week.